Hello and welcome to the CNBC TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this afternoon. Well, it's turning out to be a session of largely consolidation, you'd have to say at this point in time. So we have the Nifty, which is just about flat along with the sensex. And we have the mid-cap index, which has been under pressure. So flitting between losses and gains for the frontline indices. But it's been continuous losses for the mid-cap index, which is currently down around 0.3%. Let's see whether there's any kind of recovery on an intraday basis. As of now, we have the advanced decline ratio, which is completely even keel. It is a lot about specific stocks this afternoon. So right now, as you can see on your screen, Adani Enterprises is your top gain on the Nifty, along with even Cipla, which is up around 2.5%. HCL Tech, which is coming out with its numbers this Friday, is gaining ahead of that. So that stock is up around 1.7%. But joining us this afternoon, we have Rajat Bose from rajatkbose.com to answer all of the technicals. Sharad Avasthi, head of PCG research at SMIFS, to answer all of your stock queries on the fundamentals. Sharad as well as Rajat, welcome to the show. Well, Rajat, before we kick off the queries, just wanted your quick take in terms of what you're seeing in the markets, considering that the Bank Nifty is managing to hold up. Any positions that you would take on that index?
I would say that it is, unless the Bank Nifty clears 48,000 decisively, no fresh long position should be taken. Of course, I'm not talking about the day traders. Day traders can always take any position, whichever way the momentum is. But for any positional trade, I think one should wait for 48,000 to be decisively cleared. After that, one can take a long position. And since the market is only seesawing and not so much of negative thing is there, I wouldn't suggest any kind of short selling. Even for the Nifty, I would say that unless the 20-day moving average is decisively taken out on the downside, this is at 21,484 as we talk. You should not be too worried as to whether it will fall or not, because we have seen on several occasions that at lower levels, a lot of buying coming in. Only thing that worries me is that CNX mid-cap is 140 points down now. So maybe the retail people are slightly off mode or something. That's why it is not showing its normal effervescence.
Okay, all right, fair enough. Yes, there is some pressure which has definitely come into the mid-caps this afternoon. But let's get in a couple of queries now. We have Saji Prasad Verma, who writes to us from Kerala. He holds 800 shares of State Bank of India with an average price of 550 odd rupees, so sitting on a profit. He wants to know what the future prospects of this particular stock is and whether he should hold or sell this particular counter. Sharad, over to you on this one. What would you recommend on SBI? 550 is the average price, so sitting on a profit. Do you think that there could be an outperformance this year? What does it look like in terms of the fundamentals?
Yeah, certainly. I think within the PSU banks, most of the banks have rallied to much better valuations. Compared to SBI, the numbers for SBI should be better in the long term. We believe even over the next 1.5 years, we do not see any GNPA pressures. The advances growth should be decent, and most of the subsidiaries are also performing very well. Whether the mutual fund business or the insurance business. So I think all should culminate into very good growth for the bank. Expect 15 to 18% CAGR easily. And I think if you are looking at a 1 year forward number, we are targeting around 750. But if you are willing to hold till FY26 and we expect the bank to trade at say 1.5 to 2 times price to book, then you could be looking at somewhere around 875 to 900 on the stock.
Okay, and what is your call, Rajat, on the technicals of SBI? It's not been much of a mover as compared to its PSU banking peers, but technically, do you think that it's probably set up for an up move from here on?
See, whether it will really bounce back at this point in time is difficult to say, because the moving averages are signaling that maybe if the market is weak, then SBI might come down a bit further, maybe test 600 levels or so. But what I would suggest is that if somebody has already purchased it, one should continue to hold with a stop below 580. And I mean, 585 is the 200 exponential moving average. So one should continue with one's long position at the moment. And SBI, if you look at it, it is still in an uptrend. And what you see now is a short-term downtrend within a major intermediate uptrend. So I would still buy at lower levels rather than sell at higher levels.
Okay, all right. So that's the view coming in on SBI, positive on that one. Let's get another query now. We have KS Rao, who writes to us from Andhra Pradesh. He holds 200 shares of Granules India, which he's bought at 150 rupees per share. So he's sitting on a huge profit on that one. Long-term investor and wants to know what to do, whether he should probably hold on or sell this particular counter. Well, interesting call on this one. First, let's go to the technicals. It's been a strong up move that we've seen for Granules. But Rajat, do you think that it might just be prudent to probably take some money off the table now?
Yeah, actually, the last 3 days of trading activity suggests that you would do better to actually take some profits, because 400 is the level of 20-day exponential moving average. And if it were to come below that, then there is a possibility that 380 to about 370, that range could be tested. But if you ask me whether it's medium-term uptrend has been punctured or weakened considerably, no such evidence is still there. Only when you see it falling below the earlier low posted a few weeks back, that was around, say, I think 365. If that gets taken out, then you have anything for major concern. Otherwise, there is no major concern as such. At lower levels, buying might come back once again. So continue to hold it with a stop below 385.
Okay, continue to hold with a stop loss at around 385 odd. Fundamentally, Sharad, what would your call be on Granules? They have shown some amount of volatility when it comes to its numbers, but they seem to be quite optimistic going forward. What is your call fundamentally on the stock?
Yeah, I think I would also recommend to hold or continue to hold as a good long-term investment. If you look at the company, they are looking at a capex of around 2,000 crores over the next 3-4 years. That should culminate very well. Some ANDA filings they've also done. They are largely catering to the more regulated markets of US and Europe. A major share of the revenues is coming from there. So I think quality should not be an issue. Some backward integration of APIs and capsules is also working in favor for them. And I think with the capex and some one of the units slated to commission later in the next 1 or 2 quarters, that should also aid numbers. So next year we are expecting an earnings somewhere around 29, and it could easily get a multiple of around 20 times. So initially for targets of around 580, but as the capex starts rolling in and the effects start rolling in, if he is a long-term investor, he can wait for a period of say 4-5 years. I think even 700 could be a possibility on the stock.
Okay, all right. So optimistic both on the technicals as well as on the fundamentals for Granules. Let's get in another query now. We have Vijay, who writes to us from New Delhi. He holds 231 shares of Geo Financial Services, which he's bought at around 214 odd rupees. So he's in the money on that one. And he's also bought 24 shares of Mazagon Dock Shipbuilders, which he's bought at around 2045 odd rupees. So he's sitting on a profit on that one as well. Wants to know whether to remain invested or to book his profits on both of these counters. Sharad, what would you recommend on this one? Because Geo Financial Services, their numbers are around the corner, I think, next week. So that would be an important trigger to watch out for. But nonetheless, what would your expectation be on that one? And secondly, Mazagon Docks. A lot of these companies have been in focus on account of the defense play. Would it be a buy from that perspective?
Yeah, so first Geo, I think Geo Financial, you need to hold on to it as a multi-bagger story. The opportunity size is huge and they already have the net worth in place, the infrastructure broadly in place, the data that is available because of the Geo subscriber base on the telecom side, the Kirana mom and pop stores that they have, the retail division. I think the whole eco center is there around which the business can be built at a very fast pace. Being a strong brand and a large brand and a healthy brand, it will be very easily for them to attract talent. The top talent is already in place. The only thing that people are skeptical about is at what speed can that scale up happen. And because the group per se is not a financial behemoth, so I think this is a new venture for them. But considering the kind of diversity and that kind of database and the kind of balance sheet strength they have in space, I think the ramp could be very fast. So Geo, I think, is a very good long-term bet. You can hold on. Rough targets that I'm working with are somewhere around 600, 700, but you need to hold on for a 4 to 5 year kind of horizon. I think this is a very good multi-bagger story where most probably the speed of advances growth should surprise you on the upside, whether on the MSME side or on even on the banking side, small bank side. So I think more payment gate, payment bank side. These are all very interesting times for Geo, but you might need to wait a bit longer. The quarterly results may not give you much of a hint. It would largely be the announcement only, the AMC business related or something like that. So I think long term hold on Geo Financial as a multi-bagger story. Mazgaon again, as you rightly pointed out, the run-up has been good in most of these stocks, still trading at what, somewhere around 20-22 times FY26 earnings of around 102 expected. So I think there is a possibility that you would continue to grow 25-30%. The Nava shipyard should also come in over the next 5-6 years to aid the next level of growth. And I think the big trigger should be the addition of new orders which can happen. They recently bagged some orders for ship repairing from the US naval system as well. And I think these are opening up new frontiers for most defense companies. Even the domestic offset is clicking in, so more sourcing from domestic sources should go up. It has already gone up to somewhere around 60-65%. So that should also aid margins. So I think it is at 20 times, but I think there is a possibility that some new wins, order wins, could substantially perk up the order book. Normally, what we are expecting for most defense companies is that the
Okay.
order book should mostly double. So
Sure.
even Mazgaon, you can continue to hold for nearly doubling from current levels.
Okay, all right. Huge outperformer, Mazgon Dock shipyards. Well, for the markets, it is just about consolidating. We have the mid-cap index, which is down around 0.3%. The advanced decline ratio has kept completely even keel at this point in time. So that's a positive that is not worsened towards the declining side as of now. So just about holding with around 1,960 stocks advancing to around 1,984 stocks declining. Let's see what pans out in the last hour of trade. But as of now, it currently stands at around 1:1. We'll take a short break, but we'll answer more queries on the other side. Stay tuned. Welcome back. We still have with us Rajat, Bose and Sharad Avasthi to answer all of your stock queries this afternoon. Let's get in a quick query from Akshit Gupta, who writes to us from New Delhi. He holds 1,000 shares of Jindal Stainless Steel, which he's bought at 475 rupees per share. Wants to know what to do, whether he should hold or whether he should book profits on this particular counter. He's sitting on a profit. So Sharad, what is your view on this one?
Yeah, I think recently they've completed the capex from around 1.9 MT to 2.9 MT for the melting plant. And there is a high probability that they would continue to grow 15-16% CAGR. Some of the amalgamations that they have done that should result in some improvement at the operational levels also. Some of the nickel related raw material price issues should also get addressed because of this backward integration, two of the M&As that they have done. So I think while valuation wise, short term, yeah, 55 rupees, we are expecting FY26 earnings to be somewhere around 55. It's already trading at 11 times, so does not leave much scope. But I think with the capex that they have done, I think I would like to wait for a quarter or two to look at the impact of how that is ramping up and how the M&As that they have done shape up in terms of the margin improvements the company gets. So if you extend your horizon, wait for around 1 or 2 quarters and look how it shapes up. In case you are not willing to wait that time, I think then the valuations at current levels are more or less fair. I think 11 times, 10, 11 times, it should be fairly valued. Then you can exit. But ideally, I would like to wait for a quarter or two to see the impact of the backward integrations, the mergers, and as well as the new capacity going on stream.
Okay, all right. Would you have a view on this one, Rajat?
I would say that the chart shows that it is strongly bullish. In fact, the one thing that is very notable about JSL, that is Jindal Stainless, is that most of the time it doesn't fall below the 9-day exponential moving average, and it continues to rise. There had been intermediate term corrections between September and November, and that time actually the fall was not even more than say 10%. It doesn't fall much, but it actually climbs a lot. So the trend is strongly bullish on the short term, on the intermediate term, and also on the long term. So put a stop loss wherever one is comfortable. I would say put a stop loss below 480 and hold it for long term. This has got real good upside. If the market were to continue in a bullish mode, Jindal Stainless will continue to move up.
Okay, all right, Rajat. Thanks for bringing us that perspective on Jindal Stainless. Well, we have Puneet Saxena, who writes to us from New Delhi. He holds 238 shares of Happy Forgings, which he's bought at 850 rupees, which is the IPO price. So he's sitting on a good profit there. He's a short-term investor, wants to know what to do with it. He can hold it for a period of 6 months to 1 year. Well, since we generally don't have much information on the technicals for a newly listed company, maybe I'll throw this one to you, Sharad. What would you recommend?
I think for a 6 month to 1 year horizon, it would be better to exit the stock because I don't think that most of the capex that they will do, most probably the 6,300 ton press goes on stream in FY24 last quarter. And the 10,000 ton press is expected to be commissioned in FY25. And after that, most probably the impact of that would come. Long term, we are very bullish on the stock. We think with the capex and the existing capacity utilization ramp up, there is a possibility that earnings could double to somewhere around 45, 46 over the next 2.5 years. But in the immediate short term, I think 6 months to 1 year, maybe this is priced to perfection. But if you are willing to hold on a bit longer, I think it could easily get 30 times. So you could hold on for a target of 1350 if you can extend our horizon to 2.5 years. Less than that, I think it's better to exit at current prices.
Okay, all right, Sharad as well as Rajat, thanks very much for joining in and giving us all of the perspective that we've got on various stock queries that we've got. Well, that's all the time that we have on the show, but do remember to email us your questions and we will, as always, address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.